Original.
And I'm in love with the money.
Good morning. Today we are on Chitali. We're going to talk about tax season. And I know we all have mixed feelings when it comes around to tax season, but we're going to give you a few tips that you can take away with and kind of start you off as you prepare for filing your returns. So Chitali has over 10 years of experience as a chartered professional accountant. She serves individuals as well as business owners, and I'm going to pass it on to her to give you a quick intro.
Hey, good morning. Good morning, Karen. Good morning, everyone. Absolutely, tax season is my one of the favorite time of the year. Might come surprising, but I love it because there are a lot of actions. There are so many things to get done. So as an accountant, it's a favorite time of mine. I have been doing accounting since over 10 years, and I have been, as Kardin mentioned, you mentioned, Kardin, I help out small business owners, not-for-profit charities with their annual tax returns and also audit and review financial statements. So that's my real quick, brief introduction.
Awesome. So let's dive right in. Let's talk about some of the common mistakes individuals might make when filing their returns and some tips to avoid them.
So over this tax season, specifically for individuals filing personal tax return, we'll focus on that right now. So two big advice or two big things that I would note is, first of all, getting right advice. There are instances when it might feel like it is simple job as data entry, but to give you an example, we recently had an individual who had a simple return T4 only, and they were reviewed by CRA going back to 2020 and 2021. And guess what? There were penalties of about $3,000, and that was coming down from over contribution of RRSP, which sometimes would be easy for individuals to identify, but this was a scenario when the RRSP contributions were made directly by the employer. So such things could be missed, and when you have right advisors, if you get your personal tax returns done with CPA, right, during filing the tax return, they can advise if there are over contributions and avoid the penalties down the road. So
Okay.
getting the right advice is the first advice.
Okay. And what was number two?
Number two, so I would advise not to leave the taxes till last minute. Last week, so the deadline for filing the personal tax return is April 30th. Last week of April is often very busy for accountants, finding a good accountant and at the in any case, even if you are filing it by yourself as well or getting it done by anyone else, doing it in rush often leads to mistakes, right? So
Yeah.
sometimes if you owe taxes, technology, we have been there, right? There could be issues with technology when you're actually submitting button for payment, and without any fault, you might be late in making your payment. So
Okay.
do not leave it till last minute.
And what's the penalty for filing late?
So there are two portions. First is the interest itself, and the other one is late filing. So if you owe any taxes, the penalty is calculated 5% upfront and then 1% every month up to about 12 months. And that's a late filing penalty. The interest penalty is it's calculated using the interest rate depending on the prescribed rate, which changes every quarter.
Okay, so based on what you said, get good advice, right? So you're filing your returns accurately, and also don't miss the deadline, right? Don't wait until the last minute and risk missing the deadline and then incurring the penalties. So what about tax deductions and credits that might be overlooked by some individuals? Are there anything that we could possibly look out for specifically this year when it comes to deductions and credits?
Right. So that's a really good question, Carden. We do this taxes every year. Everyone get into this process every year, but there are certain expenses that we often notice get missed. One of them is moving expense. Believe it or not, I do like oftentimes it's not the client who would have advised me that they moved during the year. Rather, it comes up in conversation often, especially if they moved early in the 2020, early in the year. It sometimes gets missed. The other one is for long haul truck drivers. They get additional deductions. They sometimes are not aware that they would be qualified for, and they don't end up providing that sufficient information to the preparer and might get missed. Or if the other one is the commission income. Individuals earning some commissions, they also qualify for additional income. Sorry, deductions. Other small ones, union dues, professional dues, if that applies to you. Real property, that's an area where there are so many different tax implications and mistakes are prone to happen. So something like if you have a change in use of your principal residence from using it for personal purpose to renting it out, there are tax implications. If not handled properly, then there are possibilities of crazy tax penalties down the road.
Okay. And for the moving expenses that you mentioned, it's not just any move that qualifies, right? It's only if you're moving for work or school. Is that right?
That's right. So the purpose is important, and also it has to be 40 kilometers closer to your previous location. So it's not like it's basically checking your distance from your previous location to your work location, and compare that with your new location with your same work location, and that should be equal to 40 kilometers or more.
Okay.
The deduction. That's correct.
Awesome. All right. So what about self-employed individuals, small business owners? What kind of tax deductions can they look out for? What should they pay attention to when doing their returns?
Right. So there are many different kinds of expenses that they can claim. Big picture, I would say any cost you incur to earn that income, that would be qualified for claiming it as a deduction. So that could be anything as repairs and maintenance, or rent expense for your office. If you took out mortgage specifically to earn that income, interest expense, travel cost. So if you have to travel to meet clients, etc., you should keep a log of the kilometers that you use for business purpose. All of those are allowable deductions.
Okay. And I know that some of the deadlines for those special type of accounts have passed, like your RSPs and your TFSAs, right? But tax planning is not just something that you do between January 1st and March 1st, right? Or April 30th. It's something that you do continuously throughout the year. So this is where I'm going to chime in and tell individuals we want to save, at least keep as much of our dollars as we can. So we use the tax efficient tools that we have throughout the year, right? For example, your cash value life insurance policy and your tax-free savings account that we use from an insurance perspective, the segregated funds, right? These are tools that you use continuously and strategically throughout the year.
And absolutely. Sorry, did I cut you there?
No, and I'm saying talking with an accountant, to see which tools will serve you best is an important step to take, right? And we do have to plan proactively our approach to our taxes, right? And using these tools can definitely help us. So another
Right.
question.
Sorry,
Go
so
ahead.
I'll just add there. So when you get your personal taxes done, it is advisable that in your final meeting with your CPA, also discuss how much room you have to contribute in your RRSP in 2025, right? So exactly, Cardin, as you mentioned, it's more cost effective to invest in chunks rather than putting in investing in a lump sum amount, right? So it's not January to March only practice, but it's always a good practice to ask your accountant right when you complete your tax return.
Yeah, and to put that refund, if you do get a refund, to good use, right? And one good way to do it is that to make sure any future earnings on that refund, if you invest it, and you should invest it, that you don't have to pay income taxes on that from those gains in the future. So use that refund strategically. Are there any other tax law changes or updates for this year that individuals or business owners should bear in mind?
So one that I would point out that should help tax preparer gather some information when they're gathering some information. It should also they should look into short-term rentals. So new for 2024, if you have a non-compliant short-term rental, in other words, you have been earning rental income for less than 90 days, and if short-term rental is in your area that's not permitted per law, then there are certain deductions which are not allowed. So when you are preparing for taxes, it's good to check if you had any short-term rental and if those were in those specific area.
Will they disallow the income as well as the expenses?
I wish. That's a good one. I wish.
They'll say the income, right? But not the expenses.
That's right. That's right.
All right. So, of course, this information that we've shared with our viewers is just a synopsis, right? Every
Yes.
individual circumstance is different. And the idea is that you just take this information as just a peep through that doorway, talk with your accountant or a professional to see what your situation requires, right? And Chitali is available to help you if you don't have an accountant. So Chitali, tell them how they can get in touch with you.
You can either email me or call. Down there, you have my email address. That would be connect at chppc.com, or phone number 647-460-3364.
All right. And we had two questions, right? One was, will you need bills, receipts for everything to show expenses for small business owners? And the other question, if I'm a sole owner of a business, will I need to file individual tax returns as well? So will it be HST filing plus individual returns? So those are two questions we have.
Sure. Okay. So the HST filing, it depends on level of your income, and if you had already registered with CRA for your HST account. Once you register with CRA for HST account, you always have to file. Depending on, and frequency would be same as when first time you have your account open. It would have been determined annually, quarterly, or monthly, and you would have to file it regardless your level of income. But if you have never registered a business account with CRA, and if your income is less than 30,000, you may not need to get an advice from CPA again. And there are certain supplies which are exempt from collecting HST. So if it is very first time and if you should register for HST, they get an advice if you should or not. So that's related to HST. Sorry, what was the first question?
Bills and receipts.
Yes, keep the receipts and bill. Definitely, you would have to keep it and saved. When you file your tax return, you don't have to submit them. But whenever there are any queries from CRA, and whenever they ask for the receipts, then you would have to provide. And the minimum number of years they recommend CRA is 7 years.
Okay, so there you have it. Keep the receipts, keep them for 7 years. And how you file your tax returns will be dependent on if you operate your business as a sole proprietor or a partnership versus a corporation. So if you can correct me, if you're a sole proprietor or partnership, it's the individual return that you file. Exactly. But if you're incorporated, you have to file one for your business as well as an individual.
You got it, Hardin. That's exactly how it is. For self-employed, and if your business is not incorporated, so we are talking about the self-employed, you have up to end of June to file your return. However, here is a catch. If you owe any taxes, that's due in April. So it's better to get it now, get it done now, so that you're aware if there are any taxes owing and you can make a payment before the deadline for payment.
Okay. And just so you know, not all accountants are created equal, right? I'm a CPA, Chitali is a CPA, but I'm not a tax accountant, but she is. So if you have tax questions, make sure you're reaching out to the right person who is knowledgeable about that area that you need help with. So again, thank you so much for listening. We are here to help. And if you have any other questions or information, it's scrolling across the screen. You can reach out to us on LinkedIn and other social media platforms where you can find us. Thank you so much for listening and enjoy your day.
Thank you, Hardin.
Bye.